We should be live. I'll give people some time to enter the stream before I start talking about some things. So the daily chart, it had been in this tight bull channel for the last several weeks, where the lows of the bars have not gone below the prior lows. So each of these lows are above the prior low. And after such a strong move up like that, and so many bars where the lows are higher than the prior lows in a row, then usually that first one gets bought. So that's something I'd been talking about in these live streams. I posted it in the Discord updates to be on the watch that this first, like going below this first low here, would probably be bought. Looking at the 5-minute chart, what happened yesterday. So this is the low of yesterday, and I have marked by this red line, and we can see that broke out of the low of yesterday and ultimately was bought, and this was buying from that. And where that move actually finally ended, when this move finally ended, was from the measured move here. So it's this measured move. I've drawn in from the high down to this breakout point. So you see we had this low, and then here we broke out, but it never came back and tested it. So there's just a gap here, and it's a breakout. So when you get something like that, you see a move like this, and then a breakout of that, then you can look for a measured move based on the high, and then this low. And it came right down to that measured move, and that's ultimately where the buyers came in at from around the low of yesterday. And look at the daily chart now. Now this was a bit of so this bear bar here is different from what's been happening. It went below the prior low. It's a large bear bar. It went above and below the prior bar. So that's different from all these bars. So we probably could expect more of a trading range now instead of market just being straight up. So on the open so far, we have a gap up, which means that a trend is more likely. And we can see that yesterday when it had a gap up, it gapped up above yesterday's high. When you see a gap and there's some distance between the close and it's breaking out above like a prior high or prior low, that increases the chance it's going to be a trend day. And look what we got. We got this big bear trend day. So we do have a gap up here, and that does increase the chance of a trend. However, it is within yesterday's range. So the odds aren't as high as they would be if they broke out, if it gapped up outside of yesterday's range. Look at these first 5 bars we've had so far. Look at all its overlap. I mean, every bar is pretty much perfectly reversing the prior bar. Hey Jay-Z, good morning. Glad to see you on this Friday. So far, each of these closes have been reversed. 2 tests down here by the bears, it was bought. 2 attempts up, they've both been sold. So, so seeing this increases the chance that we'll have a trading range today. So this is Friday, so the weekly highs and lows and opens and closes are more important. So this is Monday here, Tuesday, Wednesday, Thursday. Now we're on Friday. So the low of the week is down here on Monday, and the high of the week is yesterday. And on Friday, the bears want to create as much of a tail on top as possible or create a bear bar. And the bulls want to create as much of a tail on bottom and close as high as they can. So on Friday, you often see that kind of fight. I'm going to start checking and showing the 15-minute chart. because often we'll find some good moves off of the 15-minute chart. So I think it'd be valuable to be able to switch over and add that. So 5-minute possible double bottom here. Buyers would prefer a bull bar there, but have a doji. So the bears have tried to go down 3 times here and here and here, and they're failing. So there could be some swing buyers above this. You know, they're buying here, stop below the bar, going for betting that this would be the low of the day, and then we go up. For me, we're so far from the moving average, and we're getting all this overlap that I wouldn't want to be buying above a doji like that. I'm watching this crude oil chart. I was hoping that this sell-off would continue down here, and we'd get prices breaking out down to like 60 in oil. Tired of the gas prices being so high. I'd like to see the oil prices go lower. Gold is still attempting this breakout above these highs. We'll still need more bars to figure out if this breakout's going to work. But after testing so many times here, 4 times, 5 times, I think they have a decent chance of being able to break out above. I know that Powell was speaking this morning. Well, I'm not sure exactly. Fed Powell. So he's about to start speaking now at 10 a.m. So I wouldn't expect him to say really anything that's going to really move the market. But there might be little spikes of volatility. Yeah, so something like that. I mean, you know, I don't know. I mean, this new home. I'm not sure if you can see all the way over to where I'm looking, but so now this new home sales. It's just an orange flag event. It's not. Um, it's not a red flag, so it's not too important. And then Powell speaks at 10, so I'm not sure. I mean, I doubt anything that Powell would have said so far would have caused that spike exactly at 10 o'clock. But perhaps this could be the home sales. I mean, I doubt it though, because normally those orange flag events don't move the market like this. Normally it's only the red flag events that matter.
We're committed to keeping our quality high and our prices low. Whatever you do, do it for less at Harbor Freight.
Look at what you've become. You don't feel anything, do you? I feel it all.
The Crow.
That characterized earlier
he's talking here. I'll
disinflationary
display here.
episodes when inflation expectations were less well anchored. While the task is not complete, we have made a good deal of progress toward that outcome. Today, I will begin by addressing the current economic situation and the path ahead for monetary policy. I will then turn to a discussion of economic events since the pandemic arrived, exploring why inflation rose to levels not seen in a generation and why it has fallen so much while unemployment has remained low.
I assume you can hear Powell speaking,
situation,
so if you can, let me know.
Near-term outlook for policy. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. The FOMC's primary focus has been on bringing down inflation, and appropriately so.
So this is coming in to be a pretty big bear bar.
Americans alive today
now, what I don't do,
the pain of high inflation
I
for a sustained
don't
period.
like taking trades like around the news, and I would consider this a news event.
Especially for those least able to meet the higher costs of
So I'm not just going to buy here,
like food,
but I'll monitor,
housing,
and if it keeps on going up, we can look for
high inflation
entries.
triggered stress and a sense of unfairness that linger today. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Turning to employment, in the years just prior to the pandemic, we saw the significant benefits to society that can come from a long period of strong labor market conditions.
On a path
high participation,
toward 2%,
historically low racial employment gaps, and with inflation low and stable, healthy real wage gains that were increasingly concentrated among those with lower incomes. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%, still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment
pretty strong
has
bull
returned
close
to its
there.
pre-pandemic range.
Like I said, I don't
The
buy
hiring
like
inputs
these
rates
big
are now
big
below
news
the
event
levels
bars.
that prevailed in 2018 and 19. Nominal wage gains have moderated, and all told, labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome
If we keep going
further
higher here,
cooling in labor market
We have
conditions.
this area, this gap here.
Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished,
It'd be
and the
this
downside
area right
risks
here is that
to
gap we'd be
employment
looking
have
at.
increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Yes, yeah.
We will
wouldn't
do
be very
everything
happy
we can to
buying
support a
this
strong labor market
strong
as we
pose
make
here.
further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose and why it has fallen so significantly even as unemployment has remained low. There's a growing body of research on these questions, including Gowdy Eggerson's work, which we'll shortly discuss, and this is a good time for this discussion. It is, of course, too soon to make definitive assessments. This period will be analyzed and debated long after we are all gone. The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks. As so often happens in times of crisis, Americans adapted and innovated. Governments responded with extraordinary force, especially in the United States. Congress unanimously passed the CARES Act. At the Fed, we used our powers to an unprecedented extent to stabilize the financial system and help stave off an economic depression. After a historically deep but brief recession, in mid-2020, the economy began to grow again. And as the risks of a severe extended downturn receded, and as the economy reopened, we faced the risk of replaying the painfully slow recovery that followed the global financial crisis. Congress delivered substantial additional fiscal support in late 2020 and again in early 2021. Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns over COVID weighed on spending on in-person services, but pent-up demand, stimulative policies, pandemic changes in work and leisure practices, and the additional savings associated with constrained services spending all contributed to a historic surge in consumer spending on goods. The pandemic also wreaked havoc on supply conditions. 8 million people left the workforce at its onset, and the size of the labor force was still 4 million below its pre-pandemic level in early 2021. The labor force would not return to its
So let's see what kind of
pre-pandemic
policy
trend
where we can get
until
here.
mid-2023.
Currently, there is a gap. This tail did
Supply
not come
chains
back
were
and touch
stalled
this
by a
high.
combination of lost workers, disrupted international trade linkages.
So perhaps if we get a
tectonic
second bull
shifts
bar,
in
might
the
be able to draw a measure
composition
move
and
out of that.
level of demand. Clearly, this was nothing like the slow recovery after
You know,
the
usually you want to
financial
wait about
crisis.
like 10, 15 minutes after a
Enter
news
inflation.
event.
After running below target through 2020, inflation spiked in March and April 2021. The initial burst of inflation was concentrated rather than broad-based.
So probably what's going to happen
extremely large
today,
price increases for goods in short supply, such as motor
this is
vehicles.
either going to
My colleagues and I judged at the outset
continue
that these
up
pandemic-related
the rest of the day
factors
like
would
this.
not be persistent,
well,
and thus that the
not like
sudden
this,
rise
but
in
it's gonna-
inflation was likely to pass through.
we're going to have some
fairly
sort of
quickly
measured
without
move
the
out of
need
this.
for a
We're going to get up to
monetary policy
5,700.
In short, that the inflation would be transitory.
So either going to do that, or this is going to
Standard thinking
reverse
has
in
long
some
been
way,
that as
and
long
then
as
we're going to end up
inflation
coming
expectations
coming
remain
down.
well anchored, it
Like, I don't
can
think we're gonna
be
stay in a trading
appropriate for
range
central
in this
banks
area
to
now.
look through a temporary rise in inflation.
So second bull bar.
The good ship
That's good for the
transitory
bulls.
was a crowded one, with most mainstream analysts and
Probably
advanced
would be
economy
some
central
buyers
bankers
there.
on board. I think I see some former
So
shipmates
currently,
out there
I would be
today.
looking for longs.
The common expectation was that supply conditions would improve reasonably
And I do
quickly,
think this is either going to be a bull
that
trend
the
day,
rapid
or it's
recovery
going
in
to
demand
reverse and
would
become
run
a
its
bear
course,
trend day.
and that demand would rotate back from goods to services, bringing inflation down. For a time, the data were consistent with the transitory hypothesis. Monthly readings for core inflation declined every month from April through September 2021, although progress came slower than expected. The case began to weaken around mid-year, as was reflected in our communications. And beginning in October, the data turned hard against the transitory hypothesis. Inflation rose and broadened out from goods to services, and it became clear that high inflation was not transitory and that it would require a strong response if inflation expectations were to remain well anchored. We recognized that and pivoted beginning in November. Financial conditions began to tighten, and after phasing out our asset purchases, we lifted off in March of 2022. By early 2022, headline inflation exceeded 6% and core was above 5%. New supply shocks appeared. Russia's invasion of Ukraine led to a sharp increase in energy and commodity prices. The improvements in supply conditions and the rotation in demand from goods to services were taking much longer than expected, in part due to further COVID waves in the United States. And COVID continued to disrupt production globally, including through new and extended lockdowns in China. High rates of inflation were a global phenomenon reflecting common experiences: rapid increases in the demand for goods, strained supply chains, tight labor markets, and sharp hikes in commodity prices. The global nature of inflation was unlike any period since the 1970s. Back then, high inflation became entrenched, an outcome we were utterly committed to avoiding. By mid-2022, the labor market was extremely tight, with employment increasing by 6.5 million jobs.
So 3
from the
minutes
middle of
left on a 15-minute bar.
This
And it's
increase
gonna
in
end up being
labor
this
demand was
huge-
met in
huge
part
bar
by
here.
workers rejoining the labor force as health concerns began to fade. But labor supply remained constrained. And in the summer of
Coming up and
2022,
testing the open of
labor
yesterday.
force participation remained well below pre-pandemic levels. There were nearly twice as many job openings as unemployed persons from March 2022 through
So,
the end of the year,
if I had to bet,
signaling a severe labor shortage. And
I would
inflation
say
peaked at 7.1%.
this is going to
in
be a
June
trend day
2022.
with a higher
At this
chance of being a
podium
bull
2
trend
years
day
ago,
than a bear
I
trend day.
discussed the possibility
So probably like
that addressing inflation could bring some
60,
pain
70% chance
in the
it's
form
going
of
to
higher
end up
unemployment and
bull
slower
trend.
growth.
It's going to get up here and close this gap
Some
in
argue that getting
3,700.
inflation under control would
And
require
maybe
a
30,
recession and a
40%
lengthy
chance
period of
that
high
this is going to
unemployment.
reverse here
And I
at
expressed
some
our
point, and then we're
unconditional
going
commitment
to reverse down
to
here.
fully restoring price stability and to keeping at it until the job
So
is done.
currently I am looking for longs.
The FOMC did
So
not
I'll try to
flinch
keep
from
the
carrying out our responsibilities, and our actions forcefully demonstrated our commitment to restoring
we're
price
still kind of in this breakout phase
We raised the
of this
policy rate by
news.
425 basis points.
Kind of want to see more on the 5-minute chart, but I
and
will be
another
looking
100 basis
for
points in
entries on the
2023.
2000
We've held our
tick.
policy rate at its current restrictive level since July 2023. The summer of 2022 proved to be the peak of inflation. The 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So, how did inflation fall without a sharp rise in unemployment above its estimated natural rate? Pandemic-related distortions to supply and demand, as well as severe shocks to energy and commodity markets, were important drivers of high inflation, and their reversal has been a key part of the story of its decline. The unwinding of these factors took much longer than expected, but ultimately played a large role in the subsequent disinflation. Our restrictive monetary policy contributed to a moderation in aggregate demand, which combined with improvements in aggregate supply to reduce inflationary pressures, while allowing growth to continue at a healthy pace. As labor demand also moderated,
Good morning, Wiz.
the historically high level
We're
of vacancies relative
listening
to
to
unemployment has normalized
Powell speak at
primarily
the
through
Jackson
declining
Hole
vacancies,
symposium.
without
So
sizable and
so
disruptive
this
layoffs, bringing the labor
this
market
speaking
to a
has
state
caused
where
this
it is no
this
longer a
bullishness
source
here.
of inflationary pressures. A a word on the critical importance of inflation expectations. Standard economic models have long reflected the view that inflation will return to its objective when product and labor markets are balanced without the need for economic slack, so long as inflation expectations are anchored at our objective.
I'm going to go and update the Discord, what I'm thinking.
But the stability of longer-run inflation expectations since the 2000s had not been tested by a persistent burst of high inflation. It was far from assured that the inflation anchor would hold. Concerns over de-anchoring contributed to the view that disinflation would require slack in the economy and specifically in the labor market. An important takeaway from recent experience is that anchored inflation expectations, reinforced by vigorous central bank actions, can facilitate disinflation without the need for slack. This narrative attributes much of the increase in inflation to an extraordinary collision between overheated and temporarily distorted demand and constrained supply. While researchers differ in their approaches and to some extent in their conclusions, a consensus seems to be emerging, which I see as attributing most of the rise in inflation to this collision. All told, the healing from pandemic distortions, our efforts to moderate aggregate demand, and the anchoring of expectations have worked together to put inflation on what increasingly appears to be a sustainable path to our 2% objective. Disinflation while preserving labor market strength is only possible with anchored inflation expectations which reflect the public's confidence that the central bank will bring about 2% inflation over time. That confidence has been built over decades and reinforced by our actions. That is my assessment of events. Your mileage may differ. So let me wrap up by emphasizing that the pandemic economy has proved to be unlike any other, and that there remains much to be learned from this extraordinary period. Our statement on longer-run goals and monetary policy strategy emphasizes our commitment to reviewing our principles and making appropriate adjustments through a thorough public review
So we've
every
had
5 years.
3 large bull bars in a row.
As we begin this process later this year,
I didn't like
we will
the
be
follow
open to
through from the
criticism
second
and new
bar.
ideas while
This
preserving
big
the
tail
strengths of our
bottom. I
framework.
really wanted this to close
The
above this,
limits of our knowledge
this high
so
here.
clearly
And then this
evident
bar
during
here
the pandemic.
did close above, but it got a
Demand
big tail on
humility
top.
and a questioning
Now we're also
spirit
getting this big tail and
focused
this
on learning
big
lessons
bear
from
bar.
the past and applying them flexibly to our current challenges. Thank you.
So, like, I don't think today's going to be. I'm very focused on today being a clean day. Okay, so that was Powell speaking. So, I mean, so he started speaking at 10 o'clock, and this bar already started shooting up at 10 o'clock. So, was it so much of what he said that moved the market up, or was it just that? Sometimes that'll happen, just like the news events, just by there being a news event, the market will react. Because this was going up before, this started going up at 10 o'clock. I mean, he hadn't said anything yet. And you'll see sometimes the market will want to go somewhere, but it has to wait for that news event to happen. And then the result of the event doesn't even matter. It'll just be, the market will just go in that direction because it was waiting for the news event to happen. But I don't expect today to be like a big trading range, like from here to here, and it's just going to stay with these big bars like this. I expect that we'll have either a continued move up to 5,700, or we're going to go down to at least yesterday's close and possibly lower. So I do expect there to be a lot of good trending moves today. Seems to me like there'd be more people interested in selling here after this. After these couple legs up and this double top here with these two tails. $15-minute chart. It's setting up to be a bad follow through bar from this bull bar. There's still 8 minutes left. I'm not familiar with Kane on Apex. So I'm gonna be buying above this bull bar here, and put my stop here.
Order submitted.
So I'm just gonna buy with one contract here, just because of the risk of this bar. You know, it's a 20-point bar. If it never triggers and this becomes a bear bar, then I'll just exit the order. But I think the reason to buy here, like I said, I mean, I do think today is going to be a trend day, and this initial move has been up. So, we have this initial volatility from Powell speaking, and now we're getting this bullish signal bar here. So we had like this pullback, then bullish signal bar. A lot of times on like FOMC events or on some big news event, you'll see a pattern like this play out where you'll get some sort of pullback and then a good looking bull bar, and then there are usually buyers above that bull bar. So to me, I'm going to put my profit order up to like around the top of this gap here. And the reason I'm doing 1 contract instead of 5 is because of the size of this bar, how much you have to risk.
Order submitted.
So I'm gonna place them on the trade copier as well. Okay, so
Order submitted.
Move my stop to below the bar. Let's see. I'm gonna go for. I want to go for the top of the gap. Something like that. So, if this is going to be going up, then we'll be in this swing for a little bit here. Reasons to be in this trade: double bottom from these tails here, good looking bullish signal bar. A lot of the times when you get a big news event like FOMC, you'll see an initial move, then some sort of pullback, and then you get a good looking bar to enter, and then people will buy above that bar. Bad follow through bar. Not what we wanted to see from that. So if we get like a bearish signal bar, we'll just get out below that. Like I said, I was thinking 60% chance it's going to be a strong bull trend. And then 40% chance we get some sort of reversal, and it'll be a strong bear trend. So, if we have any indication that we, so we get if there's a good bear signal bar, we'll go ahead and get out below it and avoid that chance of it going down, because we should start heading up pretty soon here if this is going to go up. $15-minute chart. After this strong bull bar, it did get a follow-through bar. So now it just needs to get above it for there to be buyers above there. So if the bar closed something like this, then we'd be getting out below that. So in the last minute of the 5-minute bar, so this will be pretty important to see what the bulls were able to do. Can the bulls buy it up, or will the bears keep the control and keep it a bearish bar? So it looks like it's going to be a bearish bar, so we'll go ahead and get out below it.
Stop filled. Order filled.
So we lost on that trade there. So I think it was a good buy. And then, if you get a bear bar like that, you need to get out. So now what I'm thinking to myself is, it's the question: is this going to be able to continue up in the bull trend, or are we going to have a reversal pattern play out here, and it's going to go down, and possibly have some sort of measured move down? Something like that, down to yesterday's low. So this could be starting to reverse now. I'd like to wait to sell until we get below the moving average, though. There's a chance that this will be the high of the day. Probably a lot of people sold below this bar. Stop here, and then are betting that it'll come down to the low of yesterday. But for me to short, really we need to get below the moving average, because look, we still haven't even touched the moving average today. This 15-minute bar closes in 1 minute. We'll have two inside bars. This bar inside this one, and the current bar inside the previous one. So the market's looking to break out of this area. It'll probably test down. It'll probably test one direction, then fail, and then go the other direction. So at this point now, we're looking for it to either go down, like probably pretty soon it'll go down below these lows or go above these highs, and then that initial move will fail. Second entry long, possible double bottom. It's not a long I'll be taking. Too much risk of it going above and then just coming back down here to these lows here. Possible head and shoulders top here. Left shoulder, head, then right shoulder. So this is that initial move I was talking about. We have these two inside bars. We'll have initial move. And then usually whatever initial move happens, it'll pull back into this range. And then at that point, it'll either continue on or reverse. So becoming a pretty big bear bar here. It's actually the biggest bar on the screen. So this might be where the bulls that were buying in here are finally giving up. And like I was saying, I'm not expecting today to be a trading range. Now, initially I was saying trading range, but now we switched during here. We switched to, it's either going to be probably 60% bull trend day or 40% chance of bear trend day. So now we're setting up for this to become that bear trend day. So I mean, the first step was getting below the moving average, and now we'll need to see how some of these pullbacks look. So at this point, I am looking for shorts, but I imagine it's going to take at least 10 minutes for a good one to set up. So this bar is about to close. We'll see if it can close below the today's low. Looks like it won't. I mean, it's still a very strong bar though. All this buying happened before Powell even started speaking. I mean, this happened. It started going up right at 10 o'clock. And so, like what I was saying, like sometimes the market wants to do something and it just has to wait for the event to happen. It doesn't matter what the results of the news event are. It's waiting for that moment to be able to implement whatever strategy it is. So, I mean, people went in with the plan to buy here. The big funds were planning to buy, and then right at 10 o'clock, they just bought. So they were just waiting for the news event. Probably waiting for more liquidity to be able to get their positions in. So they wanted to wait for that 10 o'clock time. Yeah, the bears here, they'll want another bear bar. if this becomes a bull bar here, then that's a problem for the bears. It really needs to be a at least at the minimum a small bear doji, but there shouldn't be a bull body at all here, or else there's problems with that sell off. Okay, so that's not what the bears wanted. They did not. They definitely did not want a double bottom with two tails here, and then a good-looking bullish signal bar. So, still expecting trend of some sort to occur. Market's gonna have to wait though, because we're getting lots of overlap here. Bad follow through. Bulls were buying up here, but we got bad follow through and had to sell here. And bears selling here. Well, this is not what they're wanting to see either. So I still think today will end up having some sort of breakout in a trend, but you're gonna have to wait on that. Just out of curiosity, look at what other markets have been doing. This is gold. Gold shot up. It's trying to have a double bottom here. Crude's not been as reactive as our other markets. Yeah, Bitcoin shot up pretty strongly. Now it's down a bit. We have kind of this gap area in here. You see all these tails kept trying to go lower here and couldn't until this breakout. And now we're kind of pulling back into this area. So this is one of those areas that the market doesn't spend much time in. It normally just breaks through it. So if we go higher here, we'll probably break through this area pretty quickly and then get up here. So bears that sold this close, they're definitely not very happy. Sold the close, double bottomed here, broke out, tried to break out twice below today's low, double bottomed at the 200 moving average. So they sold, and then they basically hit a wall here. Then you got a bullish bar, second bullish bar, and now the current bar is starting to get a tail on bottom. So bears that sold here, they're selling more higher, trying to get out break even. And, they're struggling to get it low enough to be able to get out. $15-minute chart looks more like a trading range. Big up, big down, tail and bottom. Probably gonna have some indecision for a little bit.
Order submitted.
I'm gonna try to take a buy here at the moving average of this channel we've drawn in, and go for 2 times my risk. If we might not be able to get filled.
Order filled.
So taking this buy, you know, there's a chance we'll get stopped out, but there's also a chance that this trend will continue up. And then, you know, that's the idea of taking these swing buys above in these little channels here at the moving average. Get rid of some of this. I know the screen gets kind of cluttered sometimes when I get a lot of stuff on it. So starting to get, you know, above halfway to our profit target. So I'll go ahead and move our stop up. And we'll get out with just a couple ticks there, probably.
Stop filled.
All right, so we got, you know, got a couple ticks there. So if I'm going to go for, like, let's say I'm risking 5 points, and I'm going to go for like 5 times my risk. You know, I think, you know, let's say I'm catching the low of the day, and I'm taking the risk that this is the low of the day, and I'm going to buy, and I'm going to go for, you know, like 25 points. Then I won't move my stop up immediately, like I did there. You know, I won't move it up once it got up to here. Because I need to give it room to be able to let that longer term trade play out. So I would just leave my stop here until it breaks out above here. Then I'd probably move to break even. But, you know, for this, we're just in that channel. We're just going for 2 times our risk. Too often it will come back all the way and stop us out. So, you know, I'd rather try to take what we can get, and avoid that coming all the way back on us. You know, I mean, it's tricky. I mean, you know, you go back and watch them, and you'll say sometimes, okay, if I left my stop there, and I would have been able to ride out the pullback, and then it would have got my profit up here. And then other times you can see, like, the right thing was to manage it and move your stop up. I mean, ultimately, like, I've looked at my own data, and I see that it's on average is better for me to go ahead and manage the trade like that. So it could be a good buy here for the same thing. I'm not gonna take it. right, so yeah, would have been stopped out there. My one of my reasons for holding off on taking, so after we got stopped out for a couple ticks profit there, I think the reason I was holding off on buying is because it should have just gone straight up. So looking at this zone on the 5-minute chart, like I was talking about with these tails, you had these tails created, and then the market just broke through. Now when we're pulling back, usually it's not going to spend much time in this zone. Usually it'll shoot right up and then stay up here. Usually it won't stay in this middle area very much. So when we were buying here, then got stopped out there, to me that was a sign that something was wrong, and because we really should have just shot right up straight through it. So this is another tail trying to come down for these bears that sold here. You know, they're trying to sell more higher, and they're trying to get it to come back to that close so they can get out with a profit on their second buy and break even on their first. But these tails haven't come back to it yet. And with this big tail here, bears might just give up after that, and then they'd be buying through here. So like this bear bar was a give up bar because the bulls were giving up here, and now we might get a similar type bar here where the bears are giving up from this. This bar is probably going to fulfill what I was talking about. Like in the zone, you know, we're not really going to have much of a tail here. It's just going to go right up and close above this area, and then play around up here instead. was pretty close to buying there. The reasons for buying that close is, like I said, the bears might be. Could be a good example of a give up bar, or good reason for them to have a give up bar here. So now that the bears have failed here, there could be an attempt to break out above this high and then continue up. I still think today is going to end up being having a strong trend, and so this could be the start of that. Strong bear bar. The bears are failing. They'll have to give up here, and that give up will help propel the market higher. Yeah, so notice how this area here, this section of these 5 points here, the market's barely spending any time here. Broke out here, it just had tails here, broke out through it here. Now we came back, and instead of having tails and staying around, it just broke out through it, and now we're above here in this upper range. We'll see. It looks like over the next, so there's still 4.5 hours today's trading. Looks like it's going to make an attempt to come up here to 5,700, close this gap. All-time high is not even all that far away. Measured move of today's range so far put us close to that. We'd probably be close enough to get pulled up to it if we got there. All right, guys, we've been streaming for a couple hours now. I'm gonna go ahead and end it. You know, today we've been in a trading range. You know, in hindsight, we can see that this is trading range, but I do expect that today will break out and make an attempt to double this range. More likely up than down. You know, this initial news was bullish, and then the bears made a strong attempt here to go lower, and then they failed. So we have, like I said, 4 hours left. So at some point, we'll probably make an attempt to break out above here. We took this long. No, I took it. It was a reasonable long. We had this move up, double bottom, good looking bullish signal bar, and then we also managed it correctly. We got out below here, so I think we took a right long, and we sold. We got out at the right point too, and you can see other people were getting out during this. But you can see how news, you know, the volatility from news, it can create trades, but you know, it can also create some tricky situations.